Good morning, folks. My name is Curtis Chandler, President of PFL. We hope that everyone had a great and fantastic weekend. The Dow closed higher on Friday of last week and was up 179.08 points, but down 227.64 points week over week. The S&P 500 closed higher on Friday of last week, up 33.58 points, but down 14.68 points week over week. The Nasdaq closed higher on Friday of last week, up 156.68 points, but down 110.63 points week over week. In overnight trading, Dow futures traded higher and are expected to open up this morning 105 points. Russia's Rosneft expects a new supercycle in oil and gas markets aimed at rapid growth in global demand for fossil fuels. The world's second largest oil producing company after Saudi Aramco said in its third quarter results, while the outlook of global economy remains uncertain due to COVID, we observe growth in demand of traditional energy resources, the company's CEO Igor said last week. Supply discrepancies have been further reviewed and a new supercycle should be on the way. Rosneft said it expects to increase in new oil gas projects to meet demand. Both benchmarks for a third consecutive week hit by strengthening dollar and speculation that President Joe Biden's administration may release oil from the strategic oil reserve cooled prices, and both were down 0.7 and 0.6 respectively. WTI crude closed down 80 cents per barrel on Friday of last week due to a strong dollar at 80.79 a barrel, down 48 cents per barrel week over week. U.S. commercial crude inventories increased by 1 million barrels week over week. U.S. crude inventories are 7% below the 5-year average for this time of year. Total motor gasoline inventories decreased by 1.6 million barrels week over week and 4% below the 5-year average for this time of year. Distilled fuel inventories decreased by 2.6 million barrels week over week and are 6% below the 5-year average for this time of year. Propylene and propylene inventories decreased by 1.3 million barrels week over week and are 14% below the 5-year average for this time of year. Propane prices were flat week over week as inventory levels dwindled. Meanwhile, European natural gas rebounded strongly on Thursday of last week, amid further uncertainty over Russian supplies, with December 21 closing up 7% at 75 euro dollars per megawatt hour. European gas prices rallied following concerns of further disruptions of Russian gas flow into Europe, said Heinz, senior management at ANS. Oil is lower in overnight trading, and WTI is expected to open down 81 cents a barrel from Friday's close. Total North American rail volumes were down by 3.3% year over year in week 44, resulting in quarter-to-date volumes that were down 3.6%, and year-to-date volumes that are up 6.5% year over year. 4 of 11 of AR's major traffic categories posted a year-over-year decrease, with the largest decline coming from intermodal, down 7.8%. The largest increases came from coal, up 11 cents, and metallic ores and metals, which were up 17.9%. North American rig count is up by 14 rigs week over week. The U.S. rig count was up by 6 rigs week over week and up by 244 rigs year over year. The U.S. currently has 556 active rigs. Canada's rig count was up by 8 rigs week over week and up by 79 rigs year over year. Canada's overall rig count is 168 active rigs. Overall, year over year, we have 323 active rigs. We are watching railcar orders and deliveries. New railcar orders moderated slightly to 8,600 in the third quarter of 2021 versus 9,500 in the second quarter of 2021, but the backlog of 1% or 37,800 units. Overall, we are seeing cars come in around replacement value, but liquidity remains challenging. Looking ahead, we continue to expect slow recovery in the railcar leasing sector, leading to improvements in railcar manufacturing. Railcar deliveries in the third quarter of 2021 were 8,300, up by 4% year over year and up by 22% quarter over quarter. Railcar orders of 2021 were up by 8,600 cars, and that compares to 2,800 in the same quarter of last year. The quarter backlog was 37,800 cars, resulting in 4.6 quarters of production or runway. On average, year over year, train speeds were down 7%. Year over year, our thoughts and leading indicators, railcar demand to improve with railcars coming out of storage and scrapping continued. This has driven the leasing market, the manufacturing, seen an impact on orders trending higher over the past few quarters. And there is tremendous pressure from the STB to increase service on all Class 1s. Less cars are going to be needed to accomplish the same job, at least that's the hope. The reading of PFL's rail report today is an absolute must. We talk about important updates on Enbridge Line 3, Line 5. We also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import, export numbers, and dive into the U.S. Latest employment situation. Bottom line, a lot of great information and a lot of fancy graphs and pictures. We hope that you enjoying reading PFL's rail report today. PFL has been extremely busy in railcar storage, return on lease strategy, subleasing, mobile repair, and cleaning, and we are scrapping a bunch of cars this month. Make sure to check out our just posted reports at pflpetroleum.com to troubleshoot or any questions that you may have. We're certainly happy to answer them. Hope